Same arrow, same indicator, same settings. One of them was a reversal trade and the other one was a breakout trade. And both of them made over 200 pips. If you think this is a problem with this tool, then you have misunderstood what the tool actually does. This is not a buy-sell arrow indicator. I'm going to say that again at the end of this video because most of you are going to forget it in about 4 minutes. This is a timing layer. It goes on top of whatever you already trade. It doesn't replace your strategy. It tells you when your strategy's idea is actually worth executing. Let me show you how it works, and then I'll show you 2 exact ways to use it. Here is an example of one problem that this tool exists to solve. Let's say you have done your analysis, you have got your 4-hour order block, you have got a daily supply zone, and your bias is bearish. You know where, you don't know when. So price walks into your zone and now you are guessing. Do you short the first touch? Do you wait for a week? Do you drop to 5 minutes time frame and look for a change of character? Do you wait for a candle close? Every one of these is a different entry at a different price with a different stop and a different outcome. That gap between I know where and I know when is where most of your losing trades live, not in your analysis, in your execution timing. That's the gap this fills. It's a statistical envelope that tells you at any moment whether price is stretched, where it is stretched relative to, and how hard it's pushing. Then it prints an arrow when a specific measurable stretch condition is met. That's it. It's a stopwatch, not a compass. Your strategy is a compass. There are 3 lines. Let's do the middle one first because everything else is built on it. So I call it the center line, but in a real sense is the triangular moving average, and it's not a normal moving average. A normal moving average weighs the most recent bar the same as the oldest bar, or heavier if it's an EMA. A TMA is something different. It weighs bars heaviest at the center and tapers off in both directions, backward and forward. The default is the half length of 50, so the full window is 101 bars. 50 behind the center bar, 50 ahead. The result is the smoothest fair value line you'll get out of price. It doesn't wobble, it doesn't chop. It's an honest read of where has this market actually been balanced. Let's go to the bands. These are the outer lines. These are not Bollinger bands. I want to be precise here because the difference is the entire reason this tool works. Bollinger bands take one standard deviation number and slap it on both sides. Symmetrical, always. Price can be ripping vertically upward and your lower Bollinger band is still sitting there, mirroring the upper one, describing volatility that isn't happening. This tool keeps 2 separate deviation engines. One accumulates only the bars that close above the center line, the other accumulates only the bars that close below it. When price pushes above fair value, the upper engine takes that energy in and the upper band expands. Meanwhile, the lower engine is getting nothing, so it decays and the lower band contracts and creeps towards the center line. That's why these bands go loop-sided. That's the elastic part. And this is genuinely useful information that a Bollinger band cannot give you. Look at this. Upper band is wide, the lower band is tight. That shape alone is telling you that this market has been extending upward with real force and it has not been rewarding the downside. Before any arrow prints, the shape of the envelope is already a bias. What does a band touch mean? On the input settings, the default deviation has been set to 3. So the upper band sits 3 standard deviations of volatility above fair value. When price reaches that band, you are being told one thing and it's a narrow thing. Price is now statistically stretched in this direction, relative to how this specific market has been behaving for the last 100 bars. That's a premium. The lower band is a discount. And that's all it means. It does not mean reverse. Which brings us to the arrows. There are 2 arrow engines in this tool and most of you have never touched the drop down. They behave completely different. Pick the wrong one for your strategy and you'll think the tool is broken. So let's start with the weak rejection plus pivot. For a weak rejection plus pivot arrow to print above a candle at the upper band, three things must all be true. 1. The candle's high pierced the upper band and price reached a statistical premium. 2. That the candles closed bullish, that is, it closed above the open, and buyers were still in control at that close. This is not a fade of weakness, this is a fade of strength. And 3. This is one nobody notices. The candle has to open higher than the previous candle's open. That third condition is the pivot. The tool waits for the next bar to open before it commits. It's asking, did the market open the next bar even further into premium? When these arrow prints, it means price moved into the extreme premium, closed strong, and then opened even higher. That is not strength. At 3 deviations, that is a stretch. That is the last buyer paying the worst price. Same case applies to the downside. Price pierces the lower band, and the candle closes bearish, and the next bar opens even lower. This means that the price is exhausted. You can use this on your strategy and look for reversals. The second arrow signal is this one, close outside the band. You can switch the arrow style on the input settings. This one ignores the wicks entirely. It requires the candle to close beyond the band, and then it measures the candle's body and demands that at least 50% of the body is sitting outside the band. You can change that 50% with the body outside input setting, crank it to 70, 80 or even 90, and you are only going to see monsters. So a wick through the band is a rejection, and a body through the band closing outside it is a displacement. That means huge volume. That's not exhaustion, that is initiation. This engine is breakout favored. Use it when your strategy is looking for continuations. Same indicator, two completely different approach towards the market. If you are looking for reversals, use the default settings, which is the weak rejections. If you are a breakout trader, use the closed outside band settings. Choose based on what your strategy is actually hunting. Do the arrows repaint? No, I cannot call it repainting. Okay, this is a segment where I tell you the truth that most indicators sellers won't. What the arrows do, when the arrows prints on a candle, it is locked permanently. But as the price moves, the bands also move, and they stop touching the candlestick that had the arrow. When that happens, the arrow may not be visible, but technically it's there. An open price never changes once it's printed. Remember, the center line reads 50 bars forward. The tool recalculates roughly the last 52 bars of the bands on every tick. That's the settling zone. The arrows in that zone stay locked, but the envelope beneath them is still finding its final level. One more piece of honesty: if you reload the indicator, restart it, switch time frames, and refresh the history, the whole arrow set gets recalculated from scratch against the now settled bands. So a couple of the most recent arrows can come back slightly different from what you watched live. That is not the arrow lying to you, that is the band having finished its maths. So this practically means that you can trade the arrow at the right edge as a live locked signal. It's real, it's honest, it will not disappear on you. Also, when you are backtesting on old history, understand that you are looking for arrows measured against settled bands. Do not be shocked that history looks marginally cleaner than live. That is not curve fitting, that's just what a centered average is. So let's move on to timing a reversal on a higher time frame order block. Right, so two workflows here, and this is the first one, and it's the one most of you will use. Say you have a 4-hour bearish order block and your buyers is short. You are waiting for price to come back into it. Here is the workflow. You need 3 things in the same place. 1, price is inside your 4-hour order block and your analysis says this is the zone. And 2, price is at or beyond your upper band and the statistics say this is the premium. And 3, an arrow prints. The tool says the stretch just got confirmed by a pivot. That is your trigger, not the zone touch. The arrow inside the zone. Always check the trend engine panel. It's calculating the average trend on 1 hour and 4 hours time frame. It only reads bullish if 1 hour and 4 hours both agree, otherwise it says sideways. For a short trade, you want that trend engine to be showing sell or sideways. If it's screaming buy, you are about to go against the trend. Take the trade smaller or just don't take it at all. Now this goes vice versa of a buy setup. Now let's go to scenario 2, timing a breakout or a continuation. So let's say you have got a level and you think it will break and you don't want to buy the fake out. This is a trade that kills breakout traders because when price pokes through the resistance, you buy and it snaps back and you are stopped over and over again. So here is the workflow. Step 1, flip the arrow style to close outside band. Now you are hunting displacement, not exhaustion. Step 2, raise the bar to push body outside points up to 70. You are now demanding that 70% of the candle's body closes outside the band. You want to see very few of these. That is the point. Step 3, read the envelope shape before the break. Watch this. As price compresses under the level, both deviation engines are starving. Neither side is getting energy. Both bands contract towards the center line. The envelope squeezes. That squeeze is your precondition. A market that has been consolidating has stored energy, which means it takes much less movement to close a body outside it. The tool is now triggered exactly when you want it to be. The next step is the break. So price breaks your level and now you are asking which candle broke it. If it's a candle with a long wick through your level that closes back inside the band, no arrow. The close outside band engines measures bodies. A wick doesn't qualify. The tool just silently declined to confirm your breakout. That is the tool saving you from a fake out. If instead it's a candle that closes with 70% of its body outside a contracted band, the arrow prints. That's displacement out of compression. That is a real break with real participation behind it. So on the next step is using the trend engine as a tiebreaker. For breakout long, the engine should say the 1 hour and the 4 hour time frame are both aligned. That is your A+ continuation. If the engine says sell, you are buying a break against higher time frame structure. That's a fade, not a breakout. Size accordingly. The next step is using the opposite band as your exit. Here is the bonus nobody uses. Once you are in and running, the opposite band is your take profit map. When price extends into the far band and the exhaustion arrow prints, your move has reached statistical stretch. That is where you trail aggressively or take partials. It's called the entry and exit timer. Most of you only use half of it. I want to close on the thing that's the hardest to sell and most valuable to own. Everything I've shown you has been about the arrow printing, but the highest value function of this tool is the arrow that doesn't print. Let's say price is in your zone. Your analysis is perfect, your finger is on the button, and the tool is showing you nothing. No band touch, no arrow. Price is sitting at fair value, right in the middle of the envelope, completely unstretched. What is that telling you? There is no edge here right now. You are not entering at a premium and you are not entering at a discount. You are entering at an average. You are paying full price for a lottery ticket. That trade you didn't take, that's the number that never shows up in your journal. Nobody posts their trades I correctly skipped screenshots. But that's where this tool pays for itself. This is a filter, and a filter's job is to say no. If you take nothing else from this video, the tool doesn't tell you what to trade. It tells you whether right now is a good price for the trade you already decided to take. That's it. That's the whole thing. That's why it works on any strategy. SMC, supply and demand, ICT, plain support and resistance, an RSI system, whatever you run. It doesn't care about your method. It only cares whether price is currently stretched. Bolt it into what you already do. Don't replace what you already do. Quick run through the 4 settings that change your results. Ignore the rest until you understand this. Arrow style. The default is for reversals. Close outside band is for breakouts. This is the biggest single switch in the tool. Set it to match what you are hunting. Bands deviations. The default is set to 3. Lower it to 2.5 and you'll get more arrows earlier with lower quality. Raise it to 3.5 and you'll get very few, very late, very high quality. 3 is the balance. Move it in small steps and actually record what happens. Half length, the default is set to 50, so 101 bar window. Bigger means smoother and slower and a longer settling zone at the right edge. Smaller means twitchier. 50 is where I have left it for a reason. Trend time frame, the default is set to both. The 1 hour and the 4 hours must agree or the panel says sideways. Keep it there. That disagreement is information. Entry and exit timing indicator. The link for downloading this indicator is in the description below this video. You get a 3-month trial from the day of download. If you want to get an unlimited version, you can register your account under my Deriv affiliate link and send me your client ID, or buy the whole source code on the ultimatetrading.tools website. The source code is the most important file because you can use it to automate your strategy with AI, which I will be showing you in the next video. If you are already running a strategy that works but your entries are sloppy, this is the layer you are missing. Drop a comment with your strategy and I'll tell you which arrow mode to run and what to set on the applied time frame. I try and read all of them. The Telegram link is in the description to access more trading tools and ideas. And say it with me one more time before I go. It's not a buy and sell arrow, it's a timing layer. See you in the next one. I'm out. Peace.